S&A Investor Radio looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street, right to you on Main Street.
How's it going out there? It's Wednesday, July 20th, and I'm Frank Curzio, host of the S&A Investor Podcast, where I break down the headlines and tell you what's really moving in these markets. You know, I had an important moment in my life this past weekend. My wife and I were hanging on the couch on Saturday. It was about 12 o'clock in the afternoon. I looked at her and said, you know what? Let's take a ride to Orlando. We'll call our babysitter, see if she could stay the night, watch the kids. We'll go to Universal Studios, Islands of Adventure. And the next morning, maybe we'll go to the regular Universal Park for a couple of hours, and we'll just shoot home. And I live in Florida now. It's only about a 2.5-hour drive, so not too bad. You know, it's pretty cool. I thought it was a cool idea anyway. I mean, how many times can you be spontaneous with a wife and kids? You know, so I figured, you know, we got a babysitter, let's do this. Plus, I have 2 kids under 4, so, you know, I thought it'd be a good idea. So our babysitter agreed. She watched the kids. We left at like roughly 3:30 p.m. Got to Islands of Adventure at 6:30. Well, we walked into the park, and the first ride we saw was the Incredible Hulk. I don't know if you're familiar with the Incredible Hulk. That's that roller coaster that has 7 twisting loops, goes like 70 miles per hour, zips through water at one point. And I'm a big fan of roller coasters. I've always been. Great adventure growing up, going to Jersey from New York. Always a big fan. I also love heights. So I told my wife, you know what, let's do it. You know, she was nervous at first, but agreed to go on the roller coaster with me. So we went on the Hulk ride. Again, we're in the park. We just walked in the park. So it must have been about 10 minutes. That's the first ride we went on. By the time I got off the ride, I was done. My stomach was hurting. I felt dizzy. Coming from a guy who skydived at 14,000 feet, also bungee jumped, this was a different experience. I finally, officially realized that I'm old. I know most of you listen to this podcast. A lot of people out there to email me between 50 and 80 and say, you know what, Frankie, 40, you're crazy. There's no way you're old. It's 40. But, you know, it's like a life-changing experience when you can't do things that you're used to doing. And I think at 40, you finally realize that. I used to exercise without feeling sore. Used to be able to play competitive basketball and chase around guys that played in D1. Can't do that no more. Work out with my trainer. I'm sore for 2 days. Taking Tramadol to ease the pain, relax my muscles. Life's a lot different now. And you know what? Going on the Hulk ride, I finally realized it. So it's official. I'm going to join softball. I've been asked a ton of times to be on different softball teams for 15 years. I always said the same thing. I said, I'm not going to play softball ever until I really can't play anything else, since it's the least athletic sport in the world. And you hit a pitch coming at you 5 miles per hour. There's 4 outfielders, so it's either a home run or a base hit. The game's so slow, you only need 1 umpire. So now I've officially become a softball player, and I'm depressed as hell. Anyway, I promise you 2 things for today's podcast. The first is Jim Rogers, and you got him. Jim's one of the best commodity experts in the world. He's an author of several books. And oh, yeah, he does have a little bit of money. He's a billionaire. I interviewed him for roughly 30 minutes, and that's the longest I've ever seen anyone interview him. I asked him some questions outside of our governmental problems and the dollar, since you could see plenty of that in his interviews on Fox, at Business News, also on Bloomberg. Jim's going to tell you his favorite place to invest. It's a country that he's never spoken about before, at least not in the 40 or 50 interviews I watched him on. I think it's a fantastic idea. I don't know anybody that's recommending to invest in this country. Also, he's going to tell you how he invests in commodities. More specific, he's going to tell you which sectors that he likes and also one of the ones that he's shorting right now. I'm going to play that interview for you in a moment. The next promise was a discount to my Phase 1 investor newsletter. Phase 1 is a small and micro-cap newsletter, focuses strictly on companies that have the potential to make you rich. We've had a 500% winner in the past 18 months, several 300% winners, and quite a few doubles since our focus is junior mining companies. It's been a great industry for us. Plus, we have a bunch of insiders that tell us a lot what's going on in there. within these junior minors that travel to a lot of these sites. Tell us which guys are for real, which ones are not. Invest in small technology stocks and also small biotechs. Most of the recommendations are companies that you've never heard of, almost never mentioned in the media. And for this specific newsletter, I also hold conference calls with the CEOs of the companies I recommend, most of them. Also, I bring on independent experts that talk about the stock. They may not like the stock. It's an independent expert. They're going to do an S&A. They'll come on a conference call, and they'll say, hey, you know what? We like the sector. That's crazy about the stock, and I'll debate them with the CEO on the conference call. So it's pretty interesting, almost like a podcast format. So anyway, the newsletter retails at $5,000 a year. Probably, if I had to guess, the biggest financial newsletter in terms of revenue in the U.S. And I mentioned a discount last week, and I've got a ton of email. A lot of feedback, people interested in the offer. What's the offer? And I've gotten so many emails, I couldn't answer all of them. I just got some of those emails Tuesday and Wednesday. But the exclusive price for podcast listeners is going to be $2,750, $2,750. That's a 45% discount to the regular price. That is the cheapest Phase 1's ever been sold for since I've been editor, and you're not going to be able to get that price anyplace on the web. The only way you can get it is by two ways. You can call my buddy Dan Ostrowski. He works in sales specifically only for this offer. His email address is danostrowski@stansberryresearch.com. It's actually D. Ostrowski, DOSTROWSKI, Dostrowski@stansberryresearch.com. Or you can call him directly, 866-783-4141. That's 866-783-4141. So I know listeners have been emailing me for almost about 2 years for Phase 1, the best price I can offer. Well, there it is. Now, there's two other things I'm going to mention before we get on to the Jim Rogers interview. You only have 7 days to subscribe to that offer. Then it'll jump back to the $5,000 price for Phase 1. Also, the reason why I'm making this offer today is because I'm working on one of the best biotech research reports you're ever going to read. I'm consulting with top analysts, CEOs, founders of several biotech life sciences companies. I know I mentioned this last week just a little bit. This issue is going to come out on August 4th, a couple of weeks from now. We'll have at least 4 new life sciences recommendations. We're trying to get 5 in there that I think have enormous upside potential. Great industry right now. Again, talking to some of the leading experts within this industry. So you subscribe today, take the time to read all my back issues before the issue comes out, and because we still have a lot of great companies that are buys. So as listeners know, I usually offer my products, Penny Stock Specialist Phase 1, when there are great buying opportunities. This is one of those times. So once again, to subscribe to that special offer that you've requested, D. Ostrowski@stansberryresearch.com, or by calling 866-783-4141. That's 866-783-4141. Okay, guys, enough of that offer. Now let's get to the Jim Rogers interview. A few things before we listen. Jim is riding on an exercise bike during the whole interview, so he's going to sound winded. So I'll let you know. He actually had a coughing fit towards the end, which scared me a little. We did edit it. But I was like, look, bud, take a drink of water, catch your breath. I don't want anything to happen to you. Anyway, I really don't want anything to happen to the guy, although that may have put my podcast on front page news across the world. But anyway, I didn't want anything to happen. I really appreciate him coming on. Anyway, here is that Jim Rogers interview. We're talking this week to legendary investor, author Jim Rogers. Jim, thrilled to have you on the S&A Investor Podcast. I'm a big fan. Thank you. Thanks a lot for taking the time to join us. I really appreciate it.
Well, thank you. Gosh, I'm very, very flattered and pleased to be here.
Thanks. Well, you know what? Let's jump right in here and begin with the U.S. economy. And I'm assuming that the debt ceiling will be raised. Most economists predicting a second-half recovery. Maybe so, maybe not. But interest rates are 0 for the longest time in history, 31 months. We're printing money like crazy, which suggests the dollar will head lower. Yet, I hear that you're long the dollar these days. Could you explain that?
Well, I'm long the dollar, not because I have much long-term confidence or even medium-term confidence in the dollar. It's just that everybody's bearish on the dollar, including me. I'm probably more bearish than anybody. But whenever I've seen that in the past, it's usually led to a rally. I don't know if it's going to lead to a rally this time or not, but I stepped in and bought some dollars. I'm a terrible market timer. I'm a terrible short-term trader, so I probably should not be doing it, but I have.
Yeah, and I hear it seems like everybody is taking the opposite end of that trade these days. I heard you say great things about Tim Geithner. Yes, I'm exaggerating a little. Also about the current administration. If you can give the current administration advice right now, what would it be?
I would ask for Mr. Geithner's resignation. I would abolish the Federal Reserve, and I would ask for Mr. Bernanke's resignation.
Okay.
I would also cut spending, I said, very, very dramatically. You have to take an axe to it, a chainsaw to it, and do something dramatic. You have to change other things. You have to change the tax code. You know, we tax savings and investing in America. Other people don't. We have this huge litigation problem in the U.S., which is destroying us. We spend huge amounts on medical care and education, for instance, but a lot of that goes to litigation and to lawyers instead of winding up with children's education or health care. So there are many things that need to be changed. I doubt if they will be, but that's what should be done.
Well, you say cut with a chainsaw, entitlements, Social Security, Medicare, Medicaid, everything?
We have troops in over 120 different countries around the world. They're not doing anything except making enemies around the world. You know, they're not defending us. They're not helping us. Yes, everything you just mentioned and more. You read some of the things that we spend money on in the U.S., you would be appalled. But apparently, if you say the right things to the right congressman, you get bills passed and money spent. Somebody's got to stop that. Not just defense, everything.
So say if everybody decided to take your advice and everybody resigned, what is the best possible outcome for this? They say, I mean, we start from scratch, we start over. I mean, is this the best outcome and you're looking at it from a long-term point of view? Because it seems like right now everybody's looking for a short-term solution to a problem that inevitably is going to hit us longer term, but it just keep kicking that can down the road. Eventually we're going to have to pay the price for what we're doing today, aren't we?
Well, the only long-term solution is to face reality. You know, we had the greatest credit bubble in the history of the world in the United States, and we've been having gigantic excesses for 30 or 40 years. We can't deny that. We can't just wake up one day and say, oh, okay, well, we made a mistake. Too bad. Now let's start over. No, the only way you're going to do that is to face reality now and start over. Admit people are bankrupt. Let people go bankrupt. Don't bail out people who fail. And let's start this whole situation over, because we cannot ever pay off the debt that we've incurred, and we've to face the facts now and cut spending dramatically. We've got to cut spending not with an axe, with a chainsaw. I mean, this is a very serious situation the United States is in, and therefore the world.
Yeah, you're making everyone listen to this a little depressed, because I should have maybe held this line of questioning for later on in the podcast. But I tell you what, we're going to move away from the U.S. economy just for a second here. In 2004, you wrote a fantastic book about commodities. It's called Hot Commodities: How Anyone Can Invest Profitably in the World's Best Market. And it's funny, though, because I followed you for a long time. I know you've been bullish on commodities a long time before that, but it seemed like in 2004 you had a lot of conviction to the point where you wrote this book, and gold was trading, I want to say $400 an ounce, silver under $10 an ounce. What made you have such conviction writing that book in 2004? Because the timing seemed absolutely perfect.
Well, I actually started a commodities index, an index fund in 1998. I can't believe how close I got to the bottom, because I rarely do. But no, I could see. I could see there'd been very little investment in productive capacity for, nearly 25 or 30 years at that point. I could see that demand was continuing to grow all over the world. I mean, I had driven around the world a couple of times at that point. I could see what was happening in Asia and the rest of the world. So with supply going down and demand going up, there had to be a bull market. I didn't think I was so smart. I just thought I looked it up. This has happened many, many times in history. I just went and looked it up. I'm not terribly smart.
A lot of people would disagree with that, especially me. But, if you fast forward to today, you have gold at a record high, silver prices $35, $36 an ounce. I saw a recent quote from you saying, commodities are a win-win, because if the economy recovers, they're going to go higher. If the economy doesn't recover, we're going to continue printing money. Should the individual investor be going, not necessarily all in, but putting a lot of money into these commodities, since I guess most investors are taught to buy low and sell high, and it seems like that's what happened in 2004. But right now, it seems like at these levels, I guess what I'm asking, do you see that there's still a buying opportunity at these levels long term for individual investors?
Well, if people can't spell commodities, they shouldn't invest in commodities, but they shouldn't invest in anything that they don't know a lot about. But if they know about commodities and if they've done their homework, then sure, I would suggest you have a lot of money in commodities. If I had said to you in, say, 1994, you should have all of your money in stocks after, a 10 or 11-year bull market run, you would have said, this guy's nuts. But that's exactly what you should have done. I would suggest to you that these days, if you know what you're doing, commodities are the best market to be in. If the world economy gets better, you'll make money in commodities because there's shortages developing for everything. If the world economy doesn't get better, they're going to print money. If you read Dr. Bernanke's statement yesterday, he essentially said that. He said if things don't get better, we're going to print more money. Well, when you print money, the way to get involved is to own commodities, real assets, whether it's silver or rice or whatever it happens to be. That's where you should have your assets.
And staying with gold here, you just talked recently about the dollar, and you said that, it's kind of a contrarian play because everyone's short, so you are long. But what about gold right now? Because, and we just talked about long term. What about short term trading opportunities? Because right now, I haven't met anybody, I don't know anybody that's telling me not to buy gold. Does that tell you maybe short term would do for a correction, or are you just focusing on long term in terms of gold and other commodities?
Well, I'm the world's worst market timer, so you should really ask somebody else or the world's worst trader. I bought a little more gold on Monday when it was down, but not very much. Normally, I don't like to buy things when they're up this high. Mm-hmm. When I say this high, having gone straight up for years. But I haven't sold any. I bought a little more on Monday, and if it goes down, I hope I'm smart enough to buy more still. I mean, gold's going to much higher. It's going to be much, much higher over the next decade.
How much higher do you think? I mean, of course, it's a loaded question. It's very difficult to tell. I mean, are we talking about, 2,000, which would be considerably higher from this price? But I hear some people throw out 4,000, 5,000. I mean, what do we talk about in terms of pricing? Again, I know that's a very tough question to predict, but what are you forecasting since you're buying gold at these levels?
Again, I don't have a forecast. I'm just watching. If the dollar turns to confetti, then you pick the number. There is no number of how high it will go if it's continued to be priced in U.S. dollars. So it's not a question I even think about, not an answer I even think about, because I'm just watching to see how the world evolves. I know it's going to go much higher, no matter what happens. But if the world turns paper money into confetti, which it looks like it might do, then there's no top for gold and silver and real assets.
And I wanted to, there's a lot of individual investors listen to this podcast, also big fans of yours. They love the fact that you're coming on this podcast. How do you invest personally in these commodities? I mean, you're saying that, you're buying gold, but do you ever invest in gold, agriculture, copper stocks like Barrick Gold, Potash, Freeport? Is it just the underlying commodity? I mean, how is somebody like you trade commodities?
Well, the studies show that you would have made more money investing in commodities themselves rather than commodity stocks over the past several decades. Now, if you are a good stock picker, then sure, you'll make more money in the stock. If you know a company which is going to discover natural gas in Chicago, I urge you to buy all you can. Then you call me because I want to buy it too. But, it's not that easy. Natural gas has tripled in the last few years, the last decade or so, and yet Enron was a natural gas company. Enron went to zero. Natural gas can go down, but it cannot go to zero. So if you're a great stock picker, buy the stocks. But otherwise, most people should buy the commodities themselves if they know what they're doing. If you don't know what you're doing and you want to buy commodities, then, of course, index investing is the way to go. All the studies have shown that index investing outperforms active management 70 or 80% of the time, year after year after year. So that would be for most people. But if you know a lot about cotton or silver or whatever, then go to it.
And I would say that you know a little bit about commodities. I would kind of agree with that. Let me ask you this, though. When you're buying the commodities, what are some of the defensive strategies you use? Because it can be such a volatile market. I mean, 2008 was a worst-case scenario type of thing, 2009. But sometimes you'll see some commodities, especially cotton, all over the place. What are some of your defensive strategies? Or, you already said a couple times that you're not a market timer. Do you just hold long-term and you kind of ignore some of this stuff?
Yes, I personally, gold and silver I buy physical as well as other ways, but otherwise for commodities, I only buy, I came up with an index, the Rogers International Commodities Index, and I invest in that because my lawyer won't let me invest in individual commodities. He just says you're too public. You speak about them, you write about them. So I just invest in my indexes. There's one for agriculture, metals, energy, and one for all commodities. But except for silver and gold, where I do buy physical as well. So to your point, I basically ignore it. Commodity fluctuations. Commodities are in a secular bull market, in my view, and I have learned in life you don't short secular bull markets. You're long in secular bull markets. If you want hedges, and I do, then you should hedge something where they're vulnerable and we're not in a major secular bull market. And that's how I do it. I'm long commodities. Doesn't matter to me what happens to them. I hope that my shorts protect me if we have sudden collapses in the world.
And one of those shorts, which I found interesting, and again, all for a recent interview I pulled this, is you short U.S. technology stocks. Can you expand a little bit on that? Because it seems like most tech companies, in terms of valuation, are pretty cheap. I'm not talking about the social media crazy valuation companies, but like Cisco, Microsoft. I mean, there's a lot of value guys that say, these are the companies to buy right now, the Intels. Talk a little bit about your short technology thesis. I think it's very interesting.
Well, they should short. They should be long those stocks if that's what they think. But I think you've answered my question. Look at LinkedIn. Look at Look at Google. Look at some of these. Look at Apple. Look at some of these stocks. It's not really cheap. You see that they're starting closed-end funds to invest in social networking again. I mean, this is a clear sign. It may not be the top, but it's not the bottom. That's for sure. So I've shorted technology stocks. I have to have, in the U.S., I have to have something as a hedge. Don't have to, but I usually do. And that's one of the areas which has been overexploited, at least in my view.
Oh, once again, we're talking to Jim Rogers, legendary investor, author, commodity investing expert. And just a couple more questions here, and I really appreciate you taking the time for our listeners. I wanted to talk to you about China. I mean, if you read the headlines in the U.S., China's real estate market it's going to crash. Growth will continue to slow. These are U.S. headlines. Corruption everywhere. I mean, from someone who lives there, visited the country for decades, what are your thoughts on this emerging economy? And I'd like to hear your long-term thoughts on this.
Well, my long-term thoughts are that China is going to be the most important country in the 21st century. The 19th century was the century of the UK. The century was the century of the U.S. 21st century is going to be the century of China. My children, who were born in 2003 and 2008, speak perfect Mandarin, fluent Mandarin, because I think the best skill that I can give children born in those years is to know perfect Mandarin and to know Asia. You can ask me in 30 years, 40 years if I did the right thing, but that's my long-term view of China and Asia and what's happening. The largest creditor nations in the world are China, Korea, Japan, Hong Kong, Taiwan, Singapore. I mean, the assets are in Asia. You know who the debtors are and where they are. I have never heard in history of people saying, oh, look at all those debtors over there. Why don't we go join them? No. Throughout history, people have said, look at all that money. Look at all those assets over there. Let's go there. And that's what's happening now. I mean, I don't particularly like saying that. I'm an American citizen and taxpayer just like you. But that's a fact. And I cannot lead my life or invest based on hope rather than reality.
Yeah, it makes sense. And it was interesting, too. You also say there's going to be ups and downs in the China market, I guess, with every market. But you actually say the biggest risk to China is water. and something we take in the U.S. for granted. Any advancements to get clean water in the provinces that need it, or is this still a major risk? Because I think that you were talking about this less than a year ago.
Well, China has a huge water problem. So does India, by the way. Several places do. There are going to be wars east of the Red Sea over oil, or there are going to be wars west of the Red Sea over water. And by the way, the U.S., in the U.S. we don't think about it. You should go down to the southwestern part of the U.S. They have staggering water problems, which are going to hit, they're hitting now, but in 5-10 years, there's going to be serious problems southwestern part of the U.S. So China is spending a lot of money trying to solve its water problems. I don't know if they will or not. First of all, I know they're huge opportunities because they're spending so much money. And second, if they solve them, then everything will be okay. But I've driven around the world twice, as you know, and I've seen whole cities, cultures, countries, which disappeared because the water disappeared. You can recover from revolution and war and famine and plague, but you can't recover if the water goes. Once the water goes, you're finished. So China has to solve its water problem, or there is no China story.
Yeah, and I'm well aware of Southwest. I actually telling a lot of subscribers to buy a company called Pico Holdings, which is buying the water rights in the Southwest, and because I know they're going to be worth so much more. So yeah, you're actually right in the Southwest. I said the whole U.S., but yes, the water is pretty scarce there. Moving, say, outside of China, are there any parts of Asia that you see are the next huge growth market that maybe few people are talking about? So other areas that you're seeing that are very promising.
Well, I'm very bullish on Myanmar and North Korea. Unfortunately, there's not much that Americans can do in North Korea, or that I can see we can do. I've been trying to find a way. Both in North Korea, well, I don't know if the North Koreans prevent it, but America says you can't do it. There's going to be a merger before too much longer of North and South Korea, in my view. And then you're going to have a huge powerhouse on your hands, because you'll have a country with maybe 75, 80 million people, lots of natural resources in the north, lots of cheap and skilled labor in the north, with huge capital and know-how in the south. So it'll be a huge powerhouse. The one reason the Japanese are so against it is because they know they'd have a serious competitor on their hands right there on the Chinese border if it happens. Myanmar's got about 80 million people, huge natural resources, disciplined, cheap labor force, right on the border of China and right on the border of India. You couldn't be much better located than where they are. So those are a couple of places. Here that Myanmar is starting a stock exchange. I'm going to see in a month or two to see what's happening there. Other than that, I don't know of any markets. See, I'm not buying stocks anywhere. I'm buying, I told you, my own portfolio is commodities, and I explained why, and currencies, and I told you I'm short technology stocks. I'm also short emerging market stocks. So I'm not really buying stocks anywhere.
I love your North Korea idea. I think it's fantastic. You didn't visit North Korea. I assume you didn't visit North Korea, right?
I went to North Korea 2 or 3 years ago.
Wow.
Not many Americans have been, but you can go. I mean, it's still legal, although not many Americans try, apparently, and the North Koreans are always skeptical when an American wants to come. But I went with my wife. We were there for maybe 4 days. We went to the DMZ and various places. No, I see enormous opportunities, and as I say, in my view, despite the propaganda, there's going to be a merger before too much longer of the North and the South. The North seems to want it very much. It's the Americans and the Japanese. It's mainly the Japanese who are against it, for the reasons I said. And since America supports Japan, or since America can't see straight many times, they're opposed it. But it's coming.
Yeah, great stuff. And last thing here, you recently wrote a book titled A Gift to My Children, A Father's Lessons for Life and Investing. And you talk about investing early and don't spend your money when you were young and Also, talk about doing your own research, drawing your own conclusions, and of course, the importance of spending time with your daughters. What else can someone take away from this book? And this is the latest book that you have.
Well, be skeptical and do your own work. Certainly don't follow the conventional wisdom. Rarely has anyone succeeded following the conventional wisdom, whether it's music or art or, literature, investing, business, or anything else. You really need to do your own thinking and do your own research. And then when everybody is, ridiculing you, you probably are on the right track. And if they continue to ridicule you, you continue to do your own homework, and you know you're right, then do it, and do it with both feet. I also say in addition to being skeptical of the conventional wisdom and what you read in the press, you have to beware of the boys as well. I was a bad boy, and I know you need to beware of the boys. So lots of things. I've had lots of failures in my life, a few successes, so I've tried to write them all down, the lessons I've learned, not just in life, but in the markets, and many of those lessons in the markets and life are pretty much the same. So I wrote them down so that my little girls will have them for the rest of their lives, I hope.
Hey, that's great stuff. And last note here, because, we talked about a lot today, and we talked about, trading, your family. When you're not trading or entertaining your family, what does a guy like you do for fun?
Well, I came to parenthood late in life, so I spend as much time as I can with my family, my little girls especially. There's nobody I'd rather have dinner with than my little girls. There's nobody I'd rather travel with. There's nobody I'd rather do anything with. So I spend as much of my time as I can with them, whatever they want to do. We read a lot around here. We don't have TV, so we all like reading and do so. We do travel when we can. I take them to school every day on my bicycle and pick them up every day. So when you ask, what do? I do my little girls. Sure, I invest. I read. I exercise. I'm on my exercise bike right now, as you and I are speaking. But mainly, I make speeches. I get asked to make speeches around the world, and I like doing it. So that's basically what I do with my time, as much as I can.
That's great. Well, on a serious note here, I said this before. I'm a big fan. You tell it how it is without worrying about what people think. I like that. I know a lot of people like that, and I just want to thank you very much for taking the time to be in the show today.
Okay. Well, sometimes I can only talk and exercise so much. All right. Thank you very much. Thanks. Bye-bye.
Bye. Well, what did you think of the interview? Feel free to email me at fkersey@sansburyresearch.com. That's fkersey@sansburyresearch.com. A few notes or a few takeaways from that interview. I thought the North Korea ID was amazing. I mean, makes sense. Huge resources in North Korea. South Korea has a huge capital to invest in it. Just have to find a way to play it. That'll surface. Believe me, it will. Maybe not right now, but it will surface. I love the idea. I never heard of that before. Also, I wasn't on board with his short tech thesis. I don't think Apple, Intel, or Microsoft are shorts. Yeah, maybe you say, Intel ran up. I'm not too crazy about it. I own Intel for my personal account. I bought it when it dipped down. Got a little lucky in the price. And I wouldn't be shorting any of these stocks, even though I'm not crazy about Intel. But, I don't know. I don't know if I'd go out there and short it. But then again, that's just my personal opinion. And that's the questions you should be asking yourself. I also want to say to the individual investor, I suggest using stop losses. I mean, sure, commodities won't go to zero, but most of us do not invest on a forever basis. I mean, if you're honest with ourselves, we're really honest with ourselves, we don't invest on a forever basis. Our time frames tend to be much shorter, especially when we have losers in the portfolio. And a perfect example of this is me. I mean, I bought Bank of America for my personal account 2 weeks ago, saying, imagine 10 years from now. Remember I said that, I think it was 2 podcasts ago. The housing market does get better, which it will. It may take a long time, it may not appear that way now, but it will get better. And Bank of America is going to be the king of the world. Well, it broke $10. I just bought it 2 weeks. I'm like, wow, maybe I should wait a little bit. It's very difficult to invest in a long term. And when you see a stock coming down, you tend to want to cut that loss a little bit more. And it's good to have stop losses because once you do, you're not thinking about that loser. Because otherwise, you're focusing on that loser so much and seeing that, it's on 20%, 30%. What's going on? Let me look at the news. Let me look at the message boards. Let me do this. That. and you make yourself crazy. Instead, once you take your loss on it and you hit that stop loss, it's great psychologically because now you're focusing on new ideas that are working. And in this market, there's always new ideas that are working. Right now, it's gold. Gold is, king right now. A couple of months ago, it was natural gas. Instead of focusing on that one small technology stock down 30%, 40%, 50%, 60% because you don't have a stop loss, now you cut your losses and your mindset is like, okay, what am I looking at? What's the next deal? What are some of the stocks on that watch list that Frank tells me to create all the time that have come down that I like right now? And that should be your focus of investing. So that's my point of view. Some of us, I know Dan Ferris doesn't use stop losses. It's just a different style of investing. So, it's all up to you. I just want to chime in. For me, I like to use stop losses on my positions in both of my newsletters. But Jim likes to invest in commodities. He's a billionaire, and he's like, look, they're not going to zero, and I know they're going a lot higher. So he'll invest in the long term. It's all preference. All up to you how you want to invest. Overall, I really like Jim Rogers. We had a good conversation before and after the taping. It kind of reminds me of New York. My friends say exactly what's on his mind, which is really cool. You don't get that a lot of times, especially in the media. And based on our conversation, I think he's going to be on the podcast again because he really did like it. That's it for me. Last time to subscribe to the Phase 1 special offer, Dan Ostrowski, or D. Ostrowski, I apologize, at stansberryresearch.com, or by calling 866-783-4141. You have 7 days to do so. I know most of you will not subscribe to this. This is a high-priced newsletter, so no worries if you don't. However, there are a lot of you that are interested. I received over 100 emails for this. For those of you who listen to this, this is my way of giving back and saying, hey, that offer is for you. Again, you're not going to find it anywhere. It's not a sales pitch. If you want it, take it. If not, no worries. But I did want to come up with at least one offer for Phase 1 since the time I've been at SNA doing this podcast. So anyway, I hope you enjoyed the podcast. I continue to be humbled by the huge support that we continue to get. I mean, listeners keep piling up to listen to me. Sometimes I ask myself why, but I really appreciate it, and I promise to you that I will continue to get good guests going forward that will help you with your investment decisions. So good investing, and I'll see you in 7 days. Take care.
The information presented on SNA Investor Radio is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.
S&A Investor Radio is produced by Stansberry & Associates Investment Research, the leader in investment newsletters.